Guys, welcome back to the channel, and it's my pleasure as always to have you all on board, and it's always a great time to share this experience with you. And by the way, thank you so much for taking your time always to tune in into this channel, because your love and support is what really encourages us to keep impacting more people's lives. So into today's video, I'll be diving more deeper into the analysis part. However, I'll be covering specific on the FOMO part, the fear of missing out, and that's what means by FOMO. So over the years, I've seen a lot of traders really jump very quickly into the market, and that is because they have a little bit understanding about the strategy or the system that they are in, and they think that whenever the price is at their area value, they need just to take an action of just jumping into the market, and they forget the small details like the market communicating to them, first giving them the signals and then giving them that particular opportunity to jump into the market. So I'll be using Euro USD as an example for today, and please let me know if you love these videos. I'll be making more of it. So let's jump straight to the chart rate. Now we'll start off on the daily time frame, and I will explain to you the reason behind. I've cutted this price just for the learning purposes and for us to really get a clear idea. And by the way, for those who are new, this channel is specific dedicated into the spiritual awareness side of things, life experience, vlog, and trading experience as well. So if it's your first time, please make sure that you turn on the notification bell so that you do not miss out by subscribing it. Now let's get back to the video. Now from the daily time frame, we can see that we are looking for this price to really come to the downside, because I'm using the Falcon strategy, and that is what I'll be covering, right? So here we can see that this was our area of volume. So this volume area caused this particular move to the downside, and price just snapped back to these particular areas to give us that commitment in price to the downside. Okay, now let's start off by cutting this off. Okay, now let's move these trend lines and give you a little bit of an insight. Okay, yeah, that's more way better clear, right? Yeah, so starting from the daily time frame. Now from the daily time frame, we are looking for this price to come to the downside because of these reasons. We can see that this was our area value, whereby the price has snapped back into this area in form of this 1, 2, 3 touch with a clear middle section and impulse, and now we are looking for the price to still come to the downside to take these previous lows before we see any shift in the market. Now if we go to the H4 time frame, we see it even more clearly, and let's just get this back over here so that we can get a clear message out of the market. Now we can all see from the H4 time frame, now we have a clear reversal structure, which is a expanding structure toward the area value over here. And as we can see at the third touch over here, we have finished with a bearish rejection, which we had that 1, we had this 2, we had that 3, which is giving us good signs that the market or the price is coming to the downside. Okay, now let's jump into 1 hour and create even more evidence, and let's just snap back the price over here so that we can learn. Okay, now from the 1 hour perspective, we can all see that this, by the way, is a current market example happening this particular week. So it's a good example. It's a really market example, really live market example. We can see here we have a 1, we have a 2, and now we are just looking for the price to come back to the third touch. And then from this third touch is when now we are going to look for our opportunities, because even looking just on the last leg on how it has formed with that 1, 2, 3. So whenever you have a reversal structure and you see this formation in price where you have this 1, 2, 3, it's a greater indication that the price is coming to an end. So it's a good sign for us to still capitalize and still look for the price to come to the downside. Now let's just wait, because we can see there we haven't got our third touch, which from the higher time frame was looking a little bit clearer. And let us now forward the price. We can see we have finished now with a bullish rejection candle. Now here is where now the FOMO part arises. How does it arise? Let's start off from the daily time frame. Okay, let's go back just to remind ourselves. The beginners or intermediate trader, what they will see from the daily time frame, what they will see is this. They will see that this is an area value where we have snapped, okay, in form of the reversal structure, which is an expanding structure. Okay, we have a clear middle section. Okay, from the 4-hour, they will come and see that from the 4-hour perspective, we have now got a strong 4-hour bearish rejection, okay, which increases more FOMO, because they think like, now we have already rejected and we finished with a bearish rejection. So the price has a very higher chance of coming to the downside or committing to the downside, which is very true, and I'm quite so fair with that, and I don't have any issue with that, right? However, here's the catch now. Here's the catch. They will press their trade because now they have seen all the confluences, considering that we have this 1, 2, we have that 3, we have 1, 2, 3 clear middle section. So what they will do, they will just want to time the price action. They will put there their entry and their stop loss just above over there, okay? And even some will just crop that, okay? They'll say, okay, it's just this, or maybe let's put that for the argument's sake, right? It's around maybe 25, okay? They int over there. So let's see what happens next. They are tagged in and it's like, wow, that's good. I thought that this is what the market will be doing. Then let's just proceed and see. That then happens. They say, wow, the price is getting even more fantastic, and now they have the confidence like, yeah, we don't have even to come back to these areas to just fill the wick, because we finished with a bullish. Maybe sometimes we are going to have the wick fill. However, in this case now we have a strong rejection, and now price is showing us more commitment in price. Now, yeah, if I just go over there, it will be running around 3 to this first inflection point around 5, which I can still lock profit. This is around 6. So they will move from the process and now thinking more about the outcome. Now let us see what the market then, what it does next. This is what the market does next. Okay, let's even just slow down the price. Okay, let's put it at this speed. This is what's happened. That's what happens. They're tagged out. And this was a clear unnecessary loss that one could have avoided. But because of just thinking more of the outcome rather than the processes, that's what's caused them to really have this unnecessary loss. Why? Because for an experienced trader would have seen this particular piece of information over here, okay, after we have created that third touch, they have seen that particular area over there as a signal price action, not an entry, because this is a signal. Price has rejected, it has finished with a bullish. So if anything, there's a very high chance of price just filling that particular wick and then wait for a clear push continuation, and then you take advantage of that. However, not only that, let us go just to the higher time frame and let me show you something that will open your eyes. Okay, from the higher time frame, we can see this was not the only area that we were looking over here, because previously we had this structure, and now the price is even looking even more clearer. Okay, oh sorry, just to draw that for you, okay, get it exact. You can see price had something of this sort. Okay, we had this. So if we just remove this all piece of information, you see we still have that 1, 2, we have that third touch. You get the lesson over there. And then if you go to the higher, lower time frame compared to that, that's a very clear structure that you can understand. So if anything, then the price was telling you earlier on just to wait for what? you just wait for a push and a flag. Now let us move to the 1 hour, and let me show you that from where we were looking before. Let me just clear up the charts, okay, and show you this. Okay, this is what we were looking before. Okay, this is what we are looking before. That was the structure. That was the structure that we are looking. And just to rewind back the price over there, let's now resize up this and put this particular structure, and let me show you the lesson over here. Now listen guys, whenever you have like an impulsive run like so, or an impulsive approach, it's always better to wait for a push and a flag, because that is the best way you can mitigate your risk. Because our main task as traders is not just getting involved into the market, however, is learning on how we can better position ourselves and then leverage the position regarding with the risk to reward ratio that we have, and manage that particular trade accordingly. So if anything, you should not have that particular FOMO. So with the Falcon system, the thing that I really love is that you can see very clearly on how the price is behaving, and as well the signals from the market, you can see them very clearly before you even execute those particular position. So I hope you learned a lot from this video, and please let me know your major takeaway from this video, and I'll be posting more of these videos. So let me know if you love them, and see you in the next one guys. God bless.